Hello? Hey, my MIT professor's on Bloomberg right now. I'm just listening. I don't think you can hear it, though. So he used to be partner at Goldman Sachs, then he ran the CFTC, then he was an MIT professor, and now he's the new head of the SEC.
Sharon Gessler, long ago and far away, we had a red herring. We all read them, differently ourselves. I start at the back and see the character and the integrity of the people involved. And as you just mentioned, you go up to that single page on dilution to see how bad the new shareholders are being taken. Do we know the dilution? Do we have transparency on SPACs or frankly on other challenges you have? Do we have visibility on these key issues right now?
Now, I've asked staff to think across our whole markets. Technology rapidly changes finance.
Fair.
And so there are rules sometimes put in place 50 years ago, for instance, on beneficial ownership. Congress said if you went past 5% and you had an intent to control a company, you had to disclose. But they gave you 10 days. And we've been given authority to shorten that. Well, technology says we can shorten that. Shouldn't the whole market know if somebody has tripped that 5% wire? So I've asked staff to think about these types of disclosure in stock buybacks, in something called derivatives, called securities-based swaps, and yes, in these special purpose acquisition companies as well, the dilution, the cost, and the like.
Well, Gary, this situation, this conversation brings up the episode around Archegos. What have you learned from that event, and what does it mean for disclosures from family offices?
Well, I think that the events of March around the family office do raise questions about the exclusion of family offices. But to us at the U.S. Securities and Exchange Commission, I've asked staff to lean in how we can have more disclosure about these derivatives, securities-based swaps. We have a reform regime that my predecessors put in place that goes live in November of this year.
All right, he's just repeating his own message.
But I think we need to also aggregate some of those holdings so people again know, have you tripped that 5% line?
All right, all right, all right, all right, all right. Hey, ladies, what's colder than cold? Ice cold. Anyways, hey, happy morning to you. Are you guys ready? Who's alive? Welcome to Forex.Today, the YouTube community of more than 18,000 beautiful people that also trade currencies. Let's go. Boom. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, crypto doesn't sound like a scam, but you might be over leveraged or you just crushed it. I mean, that's it. If you sold off the top and bought off the bottom, you crushed it. So, muchas gracias. Boom. Cool. So, hey, welcome everybody. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com, and I will also be your guide here on our journey of Forex today. So what you want to do is ask questions, get involved, take notes, write things down, document what your key takeaways in the comments section below the recording so that you can search your YouTube comments and find specific things. So if today, I don't know, you learned how to scalp, you could say this was a great overview on how to scalp. A year from now, 5 years from now, you can search your comments and like how to scalp, and it'll pull up today's video. See what I mean? Cool. Yeah, less than 2x. Right on, crypto. You're just killing it. That's all. Good for you. Okay. Cool. So anyways, yeah. So thank you for being here. And I'd like to thank Traders Way for being a part of our community as well. You are going to need a broker. You want one that you trust, someone that has earned your trust, someone that has earned your respect. Traders Way has done that with me. Maybe that lends some weight. If you go to tradersway.com, open up a demo account, play around with it for a week or two or a month or 2 months or a year, when you do have the confidence and when you do have the skills to trade real money, perhaps they've earned that loyalty. They've earned your respect, and that decision of who to open a broker, you know, which broker do you use? A lot of people make the mistake, they go for the cheapest, the ones that advertise. Okay, it's super cheap. Like, remember Robinhood when it's trading stocks? It's free. It's not free, dude. They spread you, they slip you, they sell your information to other parties. Nothing's free, bro. So when you see a currency broker, a Forex broker advertising like they have the smallest spreads, very often what they don't tell you is they're slipping you. So like ultimately you have to find a broker that you trust and one that has earned your trust, one that has earned your respect. Okay. So that's why you got to start with a demo and practice and see it for what it is. So don't go to the cheapest broker. Go for one that is the honest one. And in this case, I've mentioned it many times, but the Swiss National Bank put a lot of big brokers out of business because they were doing funny things with client money. Traders Way didn't do that, and there was never a problem. And that, right then and there, earned my respect and my loyalty. Tradersway.com. Hey, look at that. I got the webcam going. It's almost back to normal, huh? Crypto's loving the pivot points. Hey, you're welcome. You're welcome. Yeah. Yeah, you're welcome. I've been on a mission for a very, very long time. I think it was the 2007 FXCM Trading Expo in Las Vegas. I did a speech. The room was so full that the fire marshal had to kick people out. People were sitting in every seat. People were sitting in the aisles, on the floor in the center aisle, standing, 2 people deep on the left and right side of the room, and about 4 or 5 people deep at the back of the room, and then out the door, and people were just listening to the speech from outside the room. That's when the fire marshal came in. Rob Booker was speaking, I think, at the same time. He also had a packed room, and he's throwing out T-shirts, and he's got pictures of like monkeys smoking cigarettes, and he's got prizes and fun and games. I'm like, oh my God. All I have is pivot points. So I taught people pivot points. Rob had a much more entertaining show. I don't know what else he talked about, but I taught people pivot points. And then I'll never forget it because it didn't dawn on me at that time. FXCM didn't have a platform that offered pivot points. Oops, my bad. But so anyways, I've been on a mission for a very, very, very long time. So I'm glad it's working for you. Raina doesn't have a TV. Cool. All right, so here we are. And this is kind of what we've been wanting. So my thought this morning was, I am so grateful and thankful to the Forex gods for returning our markets. Not that they actually went away, but I'm telling you, after what happened after the Fed meeting, I just sensed that people were not in their right selves, not in their right minds. And so when I did the swing trading group on Thursday, it was just a group therapy thing. And we went through all of this and I said, look, really nothing's changed, right? Nothing's changed. What do you want to do? Why do you want to do it? Okay, that kind of stuff. Like, what is it that you intend to do? What's your long-term vision? What would you like to carry out? Okay, that was on Thursday. And everything has settled down since that meeting, close of trading on Thursday. So Friday really printed some bottoms. Monday, the dollar was weak, the yen was weak. Here it is, Wednesday. We've had now like the bottom, the retest, and not the retest, the bottom, the retracement, and yet another retracement, which is somewhat on a short run, a trend. And so I'm just thankful that the market behaved that way, because if it didn't, then maybe people would be confirming in their own minds that their emotions were correct. Right? Right? Like, oh, well, it is over and all this stuff. Just whoa. So I am very, very grateful because in my mind, the way the market has performed since Friday, Monday, Tuesday, and now even today, to me, it confirms that the markets never went crazy, didn't go emotional. It wasn't the end of the world. It wasn't even the end of a trend. It wasn't even the end of anything. Okay? If anything, a 2-day blip in the matrix, but one that we didn't not expect. Okay? So anyways, I look at this and think where we've gone in a week worth of emotions, and the yen is weak, the dollar's weak, the CAD is up, the euro is up, the Aussie's up, the pound is up, and the Kiwi's up. I'm like, oh my God, that's so beautiful. That is so wonderful. Okay? That is so wonderful. So thank you, Forex. So let's take a look. Let's dive into like dollar pairs, I guess, right? Maida said, what I did learn was the most important lesson of my trading career. Well, that's a good lesson, huh? Yeah. Right? Very cool. Very cool. Okay. So taking a look at Pig Dog, for example, this is the 4-hour point of view. And look at this. I have a drawing tool again. Okay. Isn't that nice? Remember, this top predicted this bottom. Not this price, 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 not that price, not that price, not that price. This price predicted this bottom. Oh, but the Fed, the inflation, blah, 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 blah. Okay? Wayne Waberkowski says he's expecting the biggest crisis in history. He said he was long gold and silver, waiting for Bitcoin to drop to 24K. Wonderful. Sounds like he's selling another book. Right. Great. All right. So that's the first step, the bottom. Okay. Now look at this. This is what we predicted Monday. Okay. We were here Monday. What has happened since Monday? Well, the bottom did hit. It did go up. It did give you even another chance, and then it go up, and then it gave you another chance, and then it go up. Okay. Thank you, Forex. Thank you. You know, if this had gone another way, emotionally, you might have convinced yourself of something not true, like Forex is too hard or something, whatever it is. Now, let me also temper your enthusiasm, okay? This and this and this is standard price action, okay? Between now and the 3rd week of August. Okay. Do not be convinced. You listening to me? Between now and the third week of August, do not be convinced that this is up, like that this is a rally trend. Don't think up now for months. Okay? What I was talking about last Thursday is what, and by the way, even the previous Thursday, we didn't talk technical analysis at all in the live trading group, right? Our swing trading group. I did complete 100% fundamentals. To say any technical analysis I do now is phooey because we're about to run into a fundamental event that has nothing to do with fundamentals. So what are the fundamentals? And we went through a lot. Anyways, I spoke for 2 hours on fundamentals with the group. Okay. Then when we met here a week later, I asked you, has anything fundamentally changed? Do you like that logic that I did over the course of 2 weeks? Do you like that logic? Do you get it? Do you understand it? What are the fundies? What does the fundies predict, or how do you use fundamentals to predict? What is your prediction based on data? And then here, okay, have the fundies changed? Has it changed anything? And the answer is no. So we prepare. We prepare to continue. Okay? But I don't want you to think that this is now up, like this was some kind of one-time event. Okay? I don't want you to think about that. I want you to think of your buying at support and particularly dips, and that we are probably in some sort of range. Okay? Okay? Do you see that? I want you to be ready emotionally now that you buy this, it goes up, and then it comes all the way down, and we test it again. I want you to think like that is what is probable. Now, if you thought that was probable, then you would change your behavior, wouldn't you? Okay, and that's how we're using multiple time frames now. This is a monthly counter trend, by the way. I'll do this in square. That's a monthly counter trend. But I don't think, right, like all that predicts is we go back to the central pivot. That's all that predicts. And it's not even reliably predicting. It's just like saying it's going back. Expect a big thing, okay? So that's all that means technically. Now, here's my thought, and then I'll burn through all the other currencies based on the same logic. I believe this is the reflation trade. This is profit taking. And that no new money is really going to come in. Okay? See, I want new money to come in and raise the pound dollar up by the end of the year. So the question is when? Well, it can come in at any time, but I'm thinking closer to the end of August than the end of June. So we got a lot of time here. But if you get key level prices, you might want to hold that just in case that is the bottom, but you wouldn't expect it. In any of the other follow-on trades, it's fair game to take short-term profits. And by short-term, I mean day trading and swing trading. Okay? I give you permission to consider R1 as much more important than typical. See, typically we're focused on R2, not R1. I don't care about R1. That's an inside week. Well, if the idea of the next few weeks is the plausibility of a giant sideways action, then you do use S1, R1. That's what you do. That's what it means. Okay? But I still think you might want to give it a shot from now and then. Hold these ones, but also looking at the blue that I drew, be emotionally prepared to be up 100 pips and get knocked out at break even. And not just once, 5 or 6 times. And if you got a problem with that, then stick with the day trading and swing trading. Okay? I did a macroeconomics class last night. And one of the things we looked at were 25-year charts. And people, I think, were taken aback by looking at some trends that were just obvious for very long periods of time. And how do you miss something? How do you miss the forest? Well, you're so close to the trees, all you see is bark, right? But anyways, all I'm saying is you can do what you want. It doesn't bother me. I don't think there's right or wrong. There isn't good or bad. I want you to make the decisions ahead of time. And I'm going to have to change that. That doesn't look good there. Anyways. Okay. So, for example, how do you handle this? Okay, you see, you had a triple bottom, higher high, higher low, 1, 2, 3 pattern, followed by a roll reversal. And you keep trading this way. Okay? And you don't anticipate, you don't expect to be heading up here. You see that, guys? Be a day trader. But I am so pleased with what I see here. I'm telling you, I'm very happy. I'm very grateful. I'm very relieved, too. I think if the market hadn't recovered so beautifully like this, again, I think it might have messed up some people psychologically. Okay? Cool. Now, going back to here, once again, this is the monthly M3. It's predicting a low somewhere around this green zone. M1 to S2. All right. Well, this came down hard. Okay, great. But what happened? Well, somewhere around here, it seems to have found a bottom. And now look what it's doing. Isn't that beautiful? Isn't that beautiful? I just don't expect to breach this easily. Okay? Now we might, but I don't trade like we're going to. Oh, did you follow it, Ray? Yeah, the discussions about used car prices and stuff. Okay. So I'm not expecting to get there soon, but I do expect to get there. Is it June? I don't know. Is it July? I don't know. I'm writing June again, July. It's because I was thinking about the next one, August. Is it August? I don't know. Is it September? Yeah, by September. You see the thought process? Yeah, I do think we'll be at this price between now and September. So, like, what else could happen? Well, you could have a situation like this. Okay? We could double bottom first. We could. Why wouldn't we? Why, right? Why would we not do that? Okay, so once again, I don't want you to like miss what we talked about on Friday or even Thursday, miss what we talked about Friday, miss what we talked about Monday, miss what we talked about yesterday, miss what I'm talking about. And all of a sudden now you just start getting in as we're approaching resistance. That's so cliche. Okay, and then ride this all down and then say, oh, Forex is phooey. Okay? Forex is phooey. Forex is not phooey. Now, let's backtrack a little bit. And this is advanced. This is something that I might say to the swing trading group, not just the Forex.Today group, but let's gather together as a community. What is your key takeaway? What did you learn about the trading of the Forex? We knew in this period we had a massive risk event. It's not just a Fed meeting, it was an important Fed meeting in which a year ago we anticipated a possible change in Fed policy. What I called talking about tapering. Okay? What did you learn about how market participants behave? What did you learn? I want you to look at this and tell yourself. I would even write it down. I'd be so bold as to write it down. Dear Wayne, let me tell you something that I just find absolutely fascinating. Okay? How did market participants handle the fundamental event? One day, 2 day, 3 day, 4 day, 5 days, 6 days, 7 days, 8 days, 9 days, 10 days, 11 days, 12, 13, 14, 15, 16, 17, 18, 19, 20, right? How did the market behave 21 days in advance? Think about it. What happened here? Where did the volume and volatility go? The next time there's a major Fed event coming, what do you want to remember? You are choosing now, you are choosing to remember or not remember. And if you don't remember, then it never happened. So you have to make a conscious effort to choose to remember. You need to anchor this somehow. Okay? So what happened? Some people say sideways, but what does that mean, sideways? People traded sideways? You can't trade sideways. Maida says, do not trade. Well, I'm not saying that either, but try to think about what happened. What did the other market participants? Think of it this way. There's a room full of 10,000 people and they're all interested in trading Forex. What's up, Joe Muff? Okay? They're all trading Forex and many of them have made a lot of money. But all of a sudden the room goes quiet. Do you understand? And then as you see the event coming closer and closer, what actually happened? What happened here? What happened here? Okay. Is it possible that market participants were leaving the market? What if you found out by the time the news came out, half the people in the room had left? They're not even in the market anymore. You're like, hey, there's only 5,000 people in the room. Where's the other 5,000? Oh, they slowly exited the side doors. By the way, exiting at the top. Do you see how smart and clever that was? These guys left and snuck out the back door at the peak. Maximum profit. And then these guys are like, wait, I think a whole bunch of people are leaving. You know what? That's probably a pretty good idea. And then they left at nearly peak. And then what? A whole bunch of people waited for the news. And as soon as the news came out, what did they do? They left too. I want you to think about that room. Because when you're in this mode over here, who's in the room with you if you're throwing down a bunch of trades? Morena says, what about the, people that are not in summer holidays, right? We're talking about market participants. Okay, Morena? So it's like when you remove the volume of trading from, let's say, Shanghai, from New York and Chicago too, right? London. I'm not saying like the Western Hemisphere, the Northern Hemisphere, you know, like this is better, good, or bad, or, oh, well, people in the Southern Hemisphere don't count and all that. I'm just talking about there's enough market participants and enough volume in the markets and trading that there's significantly less market participants. That's all. So it's hot here. I know it's cold and rainy there, but that's just that. It just happens to be where the maybe not the vast majority of people, but where the vast majority of the money lives. London, New York, okay? Maybe Frankfurt you can count, right? Maybe Hong Kong, Shanghai, Singapore. But if these places are shut down, that's that. Okay? Okay, that's all. But at least Cape Town's got rain finally, right? All right. So anyways, I want you to think about this. What actually happened? How do we interpret this? People exited, then more people exited, then the news came out and a lot of people exited. Okay? So now, what's happening here? Okay? The big traders, in my opinion, simply left the market on the way down. That's not sellers. Do you understand? It's not sellers. Okay, I'm erasing this. Okay, there's no market here. There's nothing actually happening. Just because you see red candles doesn't mean that there are sellers. Okay? So, what if there were only buyers? And by and large, I look at it this way. Marina, actually, I think it's this Friday, we will get, no, it won't be this Friday. Next Friday, we will get the Commitment of Traders report. See, the Commitment of Traders report is gathered by Tuesday and reported on Friday. The event happened on Wednesday. Okay? So, next Friday at 4 p.m., the CFTC will release the Commitment of Traders report, and we can go back and look and see if bulls left the market or if bears entered the market, or both, or neither. Okay? Now, it's wonderful that the United States actually does that so we can take a look at it. I don't know if other governments do that. Okay? Okay. Now, my hunch, because I use fundamental analysis, is there is, in my opinion, on the long run, okay, looking at long-term fundamentals and the way that markets work, there's nobody on this planet selling euro dollar. You'd have to be a buffoon. Now, on the short run, hey, all is fair in love and war and trading, right? Like on the short run, totally get it, okay? But when I'm thinking about how are hedge funds positioning themselves, other macro funds, commodity trader funds, Forex funds, hedge funds that have a 3, 4, 5 year outlook, okay? Because that's how I have to position myself against my competition. I can't go into a room and say, well, for the next 21 days, I'm selling euro dollar. And then, 42 days after that, I'm longing euro dollar and all that kind of stuff. I have to have that outlook, right? And when I think about what other trading firms are pitching, it's selling dollar. You could say, well, they're buying this. Well, and I'll interpret that as selling dollar. Or, oh, well, they're investing into, international funds because the S&P 500 is overvalued. So now they're going international. Well, I'm going to say that's selling dollars. Oh, well, the commodity prices and blah, blah. Oh, well, that's selling dollars, right? I'm going to translate everything back to selling dollars. Okay. So with that in mind, right, I believe when I see the dollar strengthen and there's no fundamental reason for it, then what is it? People taking profit on dollar short positions. And so I'm thinking up here a little bit. It's a little esoteric, I understand, but there's a lot of truth in it. Just because you see euro dollar falling doesn't mean people are selling euro dollar. You can, of course, and that leads to some great day trading, right? But it doesn't necessarily mean that's true. So I want you to, again, right before I delete this, I want you to think about this. The next time you believe there's a big fundamental event on the calendar, one where there might be a change in policy, and you believe the market is heavily net something, they're very heavily net long euro or very heavily net short dollar. Think of it like when the market is at extreme levels, everybody's in the same trade. Everyone's short yen, for example. And you come up to a risk event that you believe is key. And there are people here that can confirm. I talked about June 16th, 2021, a year ago, 9 months ago, 6 months ago, 3 months ago, 2 months ago, 1 month before, right? Like it's coming, it's coming, it's coming, it's coming, it's coming, it's coming, it's coming. So that's an example of anticipation, okay? So when the market is heavily net long or net short and vulnerable to this event, what would you tell yourself in the future, or what would you tell a young emerging trader that you're mentoring, somebody on your team? How would you guide them through this? And here's a great example. If you choose to remember it, then you can share it and apply this knowledge. And I'm pushing this hard because I'm telling you, most people won't remember. They'll just keep going on, and here, it comes and it goes. Okay? Nelson says he can confirm that I reiterated it multiple times. Yes. Well, it's the basis of trading, right? So I'm begging you now and pleading, find a way. I'm about to erase all this. Find a way to remind yourself of what you experienced, and then make sure you learn it. I would, for example, write it down like a story. Set it up, set the stage. Write it down. What do you remember? Okay? Start large and go small. Do you ever notice how they do, how you film a movie? Enter scene, farmhouse in the distance on a hill. To the right, you can see a farmer chopping wood. Zooming in closer from a different angle, the farmer is toiling over the chopping of wood and has to stop and wipe his brow because he's a hard worker. The house in the background, in the far distance, are his children. From this new scene, whoop, now you're really close, okay? And you move closer and closer and closer in. So write it down. What's the stage? Everybody on the planet is selling dollar. Zoom in closer. Where's the toil? There's a threat to the idea, the basis of this trade, both from the fundamental news event, but also the seasonality. Zoom in closer. What happened? Well, clearly, I don't know about clearly, but the way I interpret price action here, okay? Check this out. People started leaving, right? This is May 16th. This is the June 16th. Okay? People started leaving a month early. Okay. Miranda says, hey, will that apply to all major currencies or just USD? Well, certainly USD because it's the reserve currency. So many people use it. It's used in all business transactions. Every central bank has US dollars in the vault, right? And probably, right, and half of South Africa probably has euro and dollar locked in coffee cans and shoved in the freezer or, you know, hidden under their beds or something. Right? So that makes that in particular sensitive. But, you know, if the Polish, you know, does the Polish zloty react with the same fervor? Well, not all central banks on the planet have Polish zloty, right? People don't have Polish zloty hidden under their beds, right, Marina? So, like, what, you know, what are we going to do in Cape Town? The zloty is devalued, right? So, no, but yeah, I mean, yeah, but no, right? It might strike Polish investors with, you know, particular sting, but I don't know. So that one market might move, but not as much, right? Yeah. There was a great class I almost took at the University of Cape Town. Because, you know, I was looking for something to do, right? I'm always learning, right? How many hundreds of thousands of dollars have I spent on education recently, right? I almost took a class at the University of Cape Town, and it was on cryptocurrencies. And I thought, oh my God, I got to learn from an African point of view. Because I'm learning from my prissy little, you know, first world environment where people are like, yeah, it's like money, but the government doesn't track it, right? I have a feeling, you know, if you live in a country where you don't like your government, you don't trust it, you think the whole thing is bullshit, you think they're scamming you and stealing your money and all that, you're like, you wouldn't want to use your government money, right? Right? Like, I'm like, oh, so the idea of crypto is just different, I think. They're like, who the hell cares if my transaction's anonymous or not? I just think my currency sucks. My government sucks, and I don't want to be a part of this. I just can't leave, but I can certainly try to remove myself from the environment in which I was born, right? And I thought, wow, that'd be interesting, right? So I almost took that class. And it was like $600 or something. It was like the cheaper than Oxford, right? Right? Cheaper than Oxford. But so anyways, you might want to look it up. It's starting in July or August. But you probably already have that point of view anyways. But I thought I'd love to tackle the same subject again, cryptocurrencies, but from a completely different point of view, because you're going to learn different things from different people with different interpretations, and just even the idea of why you need a cryptocurrency, I think would just be absolutely fascinating. Okay. Anyways. Cool. So some people left a month early. Okay. And here's how I look at it. Do you remember I said it was like chopping wood? I said this yesterday, I think, where I'm just going to okay. Or how about this? Has anyone here dug a hole for a post recently? Okay. You got a little post digger and you go bonk, and then you have to pull it apart to scoop, and about one handful of dirt comes out. Hardly anything. And then you got to go donk, plop. Don't plop, don't plop, don't, and you might spend an hour digging one hole. But if you hit a stone or you hit clay, then you got to get the other, a big spike, and you go bunk, 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 bunk. But the thing is, you don't get so caught up in every swing. And the way to get through it actually is just to focus on being in the rhythm of digging. No major expectation. You're like, did this one produce a lot of dirt? Did this one produce a lot of dirt? The idea is, you know what? Just get through an hour of digging and it'll probably be deep enough by then. So don't focus on each individual swing. Just focus on doing it, and doing it with the least amount of effort, really, and concern, right? And so that's how I look at this time. Like, I'm a buyer of euro dollar here. Okay. And every single trade, to me, I expect really nothing from. But I understand my goal here isn't to make a lot of money on every trade. My goal is to get a fence up. Because once I'm done digging this hole, there's another hole, and then there's another hole, then there's another hole. You know, I don't want to be so caught up in one hole, oh my God, this is going to take forever. This is crazy. This is so much work. This is never going to end. You know what? F it. I'm not even going to put up a fence. I quit. This is impossible. You can't do it. Of course you can do it. You don't have to be a rocket surgeon to put up a fence. Just sit down, shut up, and do the work. Start digging and don't stop digging. Okay? So that's how I look at this, where my goal here is to get the fence up, right? And I know I'm going to have to work all summer because I'm doing it all by myself. It's going to take a lot of digging and a lot of patience. But eventually I'll get the corner posts up. Let's just focus on that, right? And then I got to get the other posts in. And then I got to do, one at a time, right? And then the very last thing is you're putting in all the gates and stuff. Pretty soon you're done. You're like, wow, it only took all summer. It wasn't that bad. Okay? It's like going through Harvard for 6 years as an adult. Dude, just 2 classes at a time. 2 classes at a time. Just get through those 2 classes. And 2 classes is a lot, by the way. Okay? Just do your reading. 2 hours a day. Then do the reading for the other class. Another 2 hours a day. It's only 4 hours a day of reading. Right? When you're doing the paper, you don't think about, oh my God, I have a 10-page paper and I still have to do all this reading and I have to start planning for finals. Like, how do I do all this work? What do I need to do? Well, you know what? Let's just settle down. Let's focus. Just write the outline of the paper. What is the point that you're going to try to get across? And what are the key pieces of evidence that you think you could organize around this point? Right? Start gathering that. And then what I like to do is go back in the reading and find quotes to go in each piece of evidence, something that you can cite from the reading in class. Then you're like, well, for every citation from the reading, I'm going to have to find a citation from further research. So then I do that next. What else would support this thesis from other reading? And all of a sudden you focus on this outline. You're not focused on the whole paper and all that. Just keep going. Meanwhile, you're gathering your bibliography for all your citations. And, by the time you actually start writing, it's well developed and well organized, and the writing is actually quite easy. Okay? Break it down into pieces. So I'm not focused on taking the euro dollar to 130. I'm going to do it for sure. Okay? And I'm going to take this to 140. And I'm going to take this to 150. Not this summer and probably not even this year, but that's what I intend to do. So before I get all upset with the process, I have to ask myself, what do I want to do and what do I intend to do? Well, if I can dig 2 holes today, that's a good day. Okay? Okay. Nobody does SWOT anymore, but anyways, so here's what I'm looking at. It's just day by day, week by week right now. We have risks in front of us, and as we approach these risks, I have permission to take profit. It's sort of like dig holes until lunchtime, and if you can, try to get to like 1 when it's really hot, and then take lunch. Like, don't eat lunch at 11:30. Eat lunch at 1:30. Like, just finish the hole. Just keep digging. Just finish a hole, and then take a break. Okay? During the hottest time of the day, try not to work. So work really hard in the morning, right? So what I'm trying to say with that analogy is, when I get to here, I have permission to stop. Take a break. If you got 5 trades on there, take the profit if you want. Leave the most profitable one open. Take the other 4. It's okay. Okay? Because there's a realistic probability it comes down and we double bottom first. I'm okay with that. Why? Well, more people are going to leave the market right at the beginning of July. Do you see that? These trades might be people just trading. They're not investing anymore. It's not hedge funds. It's not equity funds. It's not business transactions that are weakening, or in this case, strengthening, or the shorter run weakening, right? I could anticipate, and this is my alpha, maybe you disagree with me, and I'm okay with that, but as we approach July, more people are going to go on holiday. Okay? Some people went June 15th. And some are going to leave for Canada Day. Most important day of the year, July 1st. How many people heard me talk about Canada Day in regards to our trading plan this year? How many remember I said 10 times, Canada Day, Canada Day, Canada Day, Canada Day. Not 4th of July, Canada Day, July 1st. Yeah. Well, guess what? That might bring us all back down again. Why? Because nobody's going to sell. There won't be sellers. That's why it's going to fall. But we'll also lose all the buyers. Maybe. I don't know. Okay. Okay. I don't know anything. But does that seem reasonable to you? How many Americans and how many Canadians are going to take time off around the beginning of July? In your estimation, your wildest guess, is it a high percentage of people going on vacation, even just for a short period of time, a few days, let's say, a few days, maybe a week? Do you think a lot of Americans and a lot of Canadians will take that time off? Or not very many? High or low? What's your vote? High or low? Okay. If your answer is very high or high, why would the market go up? Answer that question. You don't have to answer it here, but I want you to think about it. Okay? Because you'd have to have opinions about what market participants are actually doing. And then, therefore, you might have to go out and find evidence of it. So think about it. Don't answer it here. If you want to be super cool, answer the question in the comments section of the recording on this video tomorrow. Leave a comment. Okay? Maybe a small paragraph. Why would the market go up if many market participants are leaving? Okay? Okay? That's that. Now, why would the market fall if people were leaving? Okay. Okay. Remember, Highlander and Pete say, well, like spending rallies and stuff. Yeah, but it's not instantaneous. It's not like you swipe your credit card and money goes overseas, right? The money goes overseas when Best Buy buys the TV, not when you go to Best Buy and buy a TV. Okay? So there's a lag to all of this. But I want you to think about the mechanism here. You would have to have an opinion whether the market is net long this currency pair or net short. And if you don't think new trades are coming in, but instead trades are going to leave, then you have to say, well, what's the opposite of what was being done? You see? So think about it and write it in the comments. If more market participants are going to leave, what will the market do? Don't think about buying or selling. Think about the number of participants coming into the market and think about the number of market participants leaving the market. Okay? Going back to the example I gave before, there's a giant warehouse, and inside the warehouse is 10,000 foreign exchange traders. 1,000 left a month ago, so now there's 9,000. And then around June 1st, 4,000 people left. So now there's only 5,000 people in the room. In June 16th, after the Fed meeting, by the time we hit Thursday, there's only 1,000 people in the room. And now the last 1,000, yeah, they're placing trades right now. They're like, oh, look at that S2. This is awesome. I'm going to buy a euro dollar at 1850 because to me, nothing fundamentally has changed. This is a kick-ass price. Think about what we were talking about on Thursday. Did anything fundamentally change? The week before, I had everybody anchor what fundamentally was creating all these changes or creating these trends. So somebody at the end of that meeting said, you know what, Wayne's right. I think I'll buy at this S2. Okay. But what's going to happen as we approach July? Are we going to get down to 500 people? Are we going to get down to 250 people? Okay. That's how I want you to be thinking about this. Okay. How do you get through summer? I want you to think about that. We're mostly trading based on how many people are in the room, not the fundamental trends, because the fundamental trends haven't changed. There's just, the room is empty right now. Okay. And we need big money to create big trends. Okay. And right now the trend is people are leaving. Cool. We can still make money. We can still buy and sell with each other. Okay. But we have to wait for market participants to come back. On says, well, wouldn't the market be illiquid? Well, the thing is, we're not talking about 250 people in a room, right? So there's still millions of market participants, right? So there's still enough for your broker and their liquidity partners to match you up with buyers and sellers. But what I'm suggesting is that the trends are on pause. Okay. Okay. So here's most of July, August, and September in here. Okay. I want you to look at what we're about to go through is potentially like the market inside that black square. Okay. That's sort of the end of July to the beginning of, to the end of September. Now, this was because of the political cycle. Okay. I spent a whole year preparing you guys for that. And I did a special event when we were right here so that you could buy the euro dollar with me. And our plan was to exit here. Let me say it again. I did a special webinar in the middle, right at like 8 o'clock at night, something like that, till about midnight, if I remember correctly. My time. When was the last time I did that? Okay. It was a special event. Okay. And what we had talked about way down here was on this night, we would only be buyers. I said, if Trump wins, you will buy the euro dollar. If Biden wins, you will buy the euro dollar. Can anybody confirm that? Anybody? Okay. And can anyone confirm that that X inside the pink circle is the day we predicted time to leave? I actually exited about a week early before that, right at the top of that R2. Okay. That's a 5-week rally. Predicted day to day. In and out. And we ended the month at the December R2 on the third week of December. I said, good, go on vacation. We're done. Okay? The point here is that with some analysis, it was right here. Some thoughtful analysis about market participants, not just fundamental trends, but market participants, analyzing the market participants, or what we call the market, is just as critical of a skill. That's why I'm excited. So I think today my Oxford class starts, and in our first week, we go through behavioral finance. I love behavioral finance. Love it. So I can't wait. I'm eager. Okay? So my wife and kids are on vacation. They've already left. They're on their way to the beach. And I'm going to be reading hours and hours and hours of behavioral finance. Woohoo! Vacation. I'm so excited. Right? I love geeking out on this stuff. Okay? I love geeking out on this stuff. It's fun. It's intellectually challenging. And, it pays money. How nice is that? Okay? So I hope you like geeking out on this. Or at least listening to me geek out on it. Right? I hope so. We've been doing this for years. I very rarely go on vacation. So it's good. Now she doesn't have to babysit me. She only has to babysit the kids, When I go in, I like doing stuff my way, and I want to do this, and I want to go big, and I want to do this. Let's go big. And she's like, well, just, okay. So, so this is sort of my version of vacation. I'm going to do lots of reading, lots of planning. I'm going to catch up on a lot of work. Work meaning I think I'll mess around with MetaTraders and clean that up a little bit. And those tools are out. I thought maybe I could record some videos for that. I'm very interested in starting my fund with you guys. How many people here are you're getting close? How many people are threading together at least 3 months of profitability? I don't care if it then all falls apart and then you have to start over. But how many people are 3 months of profit, one sort of meh. 3 months of profit, one kind of meh. 3 months of profit, one kind of meh. Is anybody kind of there yet? Who's going to work for me? Johnny's like, this has been the best 8 months ever. Yeah, I know Johnny prioritizes his Forex and our webinars. So, right? I know you're in, man. I know Johnny's got your back for sure. Raina says you don't want to be a fund manager, which is fine, but right? Is that right, Henry? Is it the markets? Is it just your trading? Are you in the process of learning? Right? Yeah, on your accounts. Yeah. The nice thing about, you're not really a fund manager. If you're working for me, you'd be a portfolio manager. But the interesting thing about Marina, is that you can live off the income from that and continue trading your personal account, but not ever need to take money out. I believe most traders should go through that process, like managing a portfolio of other people's money is a side gig. It's a side hustle. And you'll never get filthy, stinking rich doing that. Okay? I've never pitched like, oh, if you work for me, it's all yellow Lamborghinis, right? No. Okay? You're doing a job. You're like a gardener. You show up, you mow, you blow, and then you go. Okay? You do your job and you get paid. It's a job. You get compensated for making wise investment decisions and managing the risk. But the cool thing is the income you earn means you don't have to pull money out of your personal Forex trading account. Okay? And here's the cool thing about that. That's the thing that compounds and compounds and compounds. Because if you never take money out to pay rent, the cool thing is then it grows. And if you're growing at 50% a year, well, 10 years of managing a portfolio on behalf of other people, all of a sudden you got a couple of M's sitting in your personal account. And now that's nice. And then another 5 years, you got like, you got your retirement money. Now you're done. Okay. But you'll never kind of go from zero to hero to like fully financially independently wealthy because you're managing other people's money. No, you're doing work for people in exchange for money. But if you're growing your own cash, you're growing your own assets that are compounding. Remember, compounding is the most powerful force in the universe, according to Einstein. So if it grows 50% and then 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 50%, because you never touch the money, but you're just making you're just trading. Oh my God, 10 or 15 years, right? Then you're like, now what am I going to do? You know what? I think I'll just take 6 years off and go to college in the middle of my adulthood. Okay? How many people do you know in other careers that in their 40s or 50s decided to take a 5-year sabbatical? Not many, unless they have like .com money, stock options or something, right? Okay. You see what I mean? So that's the side hustle. If you can earn a little bit to offset your expenses, but that allows you to compound your private stash, that's where you're going to make your big money. No, Dre, they're at metatraders.com. There's a few indicators that you get at FX Bootcamp and the training courses, but not many. I know like in the day trading course, I give you an OCO and stuff, but right. Right. And so Mina's like, yeah, she doesn't need a new career. But what an awesome way to earn passive income, right? And also be intellectually stimulated, right? And that's, I think, important for the human spirit. We're talking about GDP and productivity being important to the human spirit because it provides, dignity, for example, and how important that is. So, especially if you're retired or semi-retired, keeping your mind sharp and keeping focused on, I don't know, the events, the world events around you. It just keeps you connected and interested in growing and using your brain, versus, I don't know, sitting in front of the TV and watch Fox News all day. That turns your brain to jelly. Yeah, right, Nuno. Yeah. Cool. So, I don't know. Should we call it a day? The beautiful trading out there, guys. Beautiful. There should be nothing but smiles. Okay. We have some big risk in July, and my biggest concern right now is this. And in my mind, it will probably happen. That's why I'm saying if you're buying here and you're up 100 pips, and you're like, oh, but Wayne said we're going to 130. Well, I didn't say today and I didn't say in June. Okay? I would hope it would be more like this. Okay. BTC in good shape. Yeah, I bought it at 30K. And like, it was funny because like 3 hours later, I was up like 3,000. 3,000. I'm like, wait, it's only been 3 hours. How could I be up 10% in 3 hours? That's just silly. Lesso says, or September. Yeah, for sure. Yeah, I don't think this is a quick return, but by gosh, there's some wonderful trading going on right now. That is just so beautiful. Just look at how beautiful it is. One of the things I cover, and then I'll leave you guys with this thought. One of the things I cover in the day trading course at FX Bootcamp is that all your profits are in the wicks. Okay? These wicks and these candles are beautiful. And this tells me 120, 120, 50, maybe even 121. And then you better manage your risk. Johnny says, I'm off to go surfing in West Palm. There's no surfing on the East Coast, Johnny. What are you talking about? Cool. Yeah, have fun, Johnny. You earned it, buddy. So I will be here tomorrow. I have a swing trading group meeting tomorrow as well. And I'll be here Friday. So wish me luck on my Oxford class, and I will see you tomorrow here at Romper Room. Peace on earth. May the pips be with you. May our profits be above average. And don't worry, I'm getting a haircut on Friday too. I know, right? Like, what's going on there? What a mess. Anyways, peace on earth. May the pips be with you.